If you don't have a clear risk management, you're not a trader, you're a gambler. I've already blown a lot of accounts, and the most memorable of them was when I lost $5,000 in just one day. And trust me, I really couldn't afford to lose that money. It was everything I had. And this disaster happened for one reason only. I didn't follow my risk management. But now I look back and think, this is the most important lesson the market could have taught me. My name is Paulo Teodoro, I'm a full-time trader living in South Korea, and in this video, unlike most videos you see here on YouTube, I will prove you mathematically how much you should risk based on your account size and your strategy. Come with me. Okay guys, so this video will be divided in 4 topics. The first topic is risk management for accounts from $600 to $5,000. The second, risk management for accounts from $5,000 to $30,000. The third, risk management for accounts above $30,000. And the fourth and the last, my personal risk management. So the first topic is how you should manage the risks for accounts ranging from $600 to $5,000. So the first thing you have to understand here is, if you're in this group, it means that your account is small. So if you want to make some money from the market, you have to be more aggressive. But there's a fine line between being aggressive and being a gambler. Let's go to my computer. Okay guys, so the tool we'll be using today is the risk of ruin calculator. What is it for? Basically to measure the risk of you blow your account based in your position size and your strategy, okay? So since this is the topic 1, which is from $600 to $1,000 to $5,000, I'll set here as a starting balance $1,000, okay? You can set there how much you have, but the starting balance doesn't really matter, okay? Win rate. I will set here 40% win rate with a strategy that has at least 1 to 2 risk return, okay? So 1 to 2, I filled here. And this is the risk per trade that we will take. Let's, for example, set as 10%, okay? So win rate 40%. If you don't have at least a strategy with win rate of 40% and risk return 1 to 2, you need to really change your strategy. But because I really think this strategy is already not that good, even though it's profitable, it's a profitable strategy, but I think it's not good. The win rate is too low and the risk return is too low also. In my trades, I take at least 1 to 3. Okay, this is my risk return, at least 1 to 3. And my win rate is up to 60%. If you actually want to know my strategy, I have a video here where I show one of my strategies concerning financial analysis, okay, volume analysis. So let's go. We are taking a very simple analysis. I think at least you have this kind of strategy, okay, with 40% win rate. Risk per trade will set as 10%. Target drawdown. Target drawdown, it's basically the ruin definition, okay, it's written here. What does it mean? It means that what will you set until you can consider how much you lose, that you can consider that it ruined your account. So for example, I'll set here 95%. So it means that if I lose 95% of my account, I ruined my account. I don't need to put here 100 because imagine you have $10,000 and you lose 9,500. You have just 500. Your account is blown, okay? You basically cannot get back the money you lost. You have just 500 to make plus 9,500. So it's almost impossible, okay? So I will set 95% as a ruin definition. Percentage of balance and number of simulations, I'll set here 1,000. Let's calculate the risk. And boom! If you have a strategy with 40% win rate, risk return 1 to 2, even though it's a profitable strategy, if you set 10% as risk per trade, you have 99.7% of risk of ruin. It's basically 100% sure that you will blow your account. So why does it work like this? If you have 40%, shouldn't you, in, for example, 10 trades, win 4 trades and lose 6 trades? No, it doesn't work like this. So that the strategy, the percentage, the statistic can work properly, you need a bigger amount of trades. Okay, 10 trades is not enough. You can actually lose your 10 trades in a row. Okay, you can lose all of them in a row. But when you take a bigger amount of trades, for example, 1,000 trades, most probably the statistics will be 400 trades win and 600 loss, because you have a bigger amount. So yeah, if your strategy has this number, this statistic, you cannot risk 10% even though you want to grow your account. Why did we separate this video in topics? Because we said risk management for your account based on the size. But it's not because you have small money in your account that you can risk a lot. Okay? Because if you just look at the profit you want to make, the probability of blowing your account is 100%. Do you understand these numbers? This is very important. So in this strategy, you definitely cannot risk 10%. Okay? So now we'll make the simulation, calculating with the percentage that I consider being the best for this account size, which is 5%. Okay? Let's calculate the risk again. And now, risk per trade, 5, every time it will change. Okay, 1.8, let me calculate again. 2.3, but you see that it's always low, right? 2%, let me calculate again. 2.8, okay, it's usually below 3%, okay? So, now we have some very interesting number. If you risk 10%, it's 100% sure that you blow your account with this strategy. But if you risk 5%, you have just 3% of possibility of blowing your account. Now it became very interesting because you're risking an amount that you'll be able to make some money. Imagine you take some trade here with two times, okay? It's if you're risking 1 and your reward is 2. So you're risking 5% and you make 10% in a trade. So now it starts becoming more interesting, okay? Because you have a good risk that can bring you, it's the perfect balance between risk and the return. Even though you want to risk 10% so that you can grow your account faster, it's extremely risky because you saw in the calculation, okay? The math doesn't lie, okay? So I'm proving you here mathematically that it's possible. It's possible to grow your account even though you risk more than the trading industry tells you. For example, the trading industry will tell you to risk 1%. Okay, in my trades actually, I risk even less. I risk 0.5%. We'll talk more later about my risk management because it's a little bit more complex. But you have to change the risk based in your account size. Okay, your situation is different from my situation, that is different from the situation of someone else. So you have to make what is better, what is the best for you. Okay, so here I'm showing if you have from $600 to $5,000, you can risk safely 5%, and you will make money, and basically your risk to blow your account is quite low. You have to pay attention on this, okay? Win rate and reward risk ratio. Why do you have to pay attention on this? Because your strategy probably has different metrics. So you have to come here in this calculator and see what is the best number for you to, for example, if you have here 60%, okay, you can maybe even risk 7%, let's say. Oh, you see your risk is completely low here. So it will change based on your strategy, in your win rate, in your risk return. So you have to come here and make this calculation, okay? Now let's go to the next topic. Okay guys, this is the second topic, and I will talk about how you should manage your risk if you have from $5,000 to $30,000, okay? The metric here of the strategy, I will keep the same. It's the same thing, 40% win rate, 1 to 2 risk return. We'll keep here ruin definition, it was 95, okay? And of course, the number will continue the same because it's the same metrics. The balance, the starting balance, doesn't really matter because, again, it's about percentage. But I changed it here to set as 5,000 because I changed it in the topic before, okay? If you see here, it's gonna be a risk of ruin around 1.9, 1.8, let's see if it goes up, 3.10, okay, this is the highest of them. But it's possible, okay, to have a little bit higher, maybe 4, but it stays around 3 maximum. The point is, okay, is it risky? Is it risky? 3% of chance to ruin my account, is it risky? Personally, I don't really think it's risky. But as soon as you start having more money, you have to, first of all, think of protecting this money, okay? So instead of continue risking the 5%, you should decrease your risk per trade so that you can stay more safe. You don't need to worry about, you can worry every time less and less in the market. Now my risk, for example, is 0.5. I think I already said something like this, but I don't really care, you know, I just take my trade and I wait. Okay, I take my trade and wait. If you're risking more, you probably will feel a little bit more stressed and you'll not feel so comfortable. So 3% of risk of ruin is high. It's not that high, okay? But for you, who is reaching already 5,000 to 30,000, if you're closer to the 30,000, 20, 25,000, you should definitely decrease. You should definitely decrease your risk a little bit, okay? So what I recommend you is 3%, okay? 3% is the risk per trade I recommend you to take. And then we can make the calculation here. And the risk of ruin is 0. What does it mean, 0? It means that if you have a strategy with 40% win rate, with at least 1 to 2 risk return, and you're risking per trade 3%, here it says it's impossible to blow your account. It's impossible to hit the 95% drawdown. Okay, this is what we set it here as a ruin. Okay, this is our ruin definition, 95%. But still, you didn't reach. It's 0% chance to reach the 95%. But if you check here in maximum drawdown, the maximum drawdown can reach even 87%. Okay, in the worst situation, this is probability calculation. So in the worst situation, it will hit 87%, and then you'll get this money back trading. Average drawdown, 65.2%. Okay. Again, you don't have chances to blow your account. It's 0, but because you have a pretty high drawdown, the probability of having a high drawdown is big. Because of this probability, we have the next topic, which is how you should manage the risk if you have more than $30,000. Okay, so now I'll show you how to manage the risks of your account if you have up to $30,000. But before I go into it, please hit the like button if you like this video, because this really helps me a lot. Let's go. Okay guys, so now I'll show you how to manage the risks of your account if you have more than $30,000. Okay, so at this level, you have to start worrying more about your protection. Okay, you do have to worry about making money, of course, but you have to protect your money even more, because you have now a meaningful amount of money. Okay, above 30,000, it's a amount of money that if you know how to trade consistently, you can even get some good extra income. Okay, maybe not still live off the markets, but you can have a good extra income from this money. All right. So what was the problem here? It's the drawdown. okay? The risk of ruin is still 0, of course, if you risk 3%. But the drawdown, the maximum drawdown is 87%, and the average drawdown is 65%. I'm blind. It's 65%, okay? So it's quite high. At this level, even though your risk of ruin is 0, you have to worry more. How can I decrease my drawdown? How can I avoid to have these massive losses in my account, and do not have such a big drawdown? This is what you have to worry about now. And at this level, my recommendation for you is risk 1%. Okay? My recommendation is that you should risk 1%. Let's check here. Okay, it's all right. It's the same metrics. Let's calculate the risk now. And now, risking 1%, you still have, of course, 0% of chance to ruin your account, to blow your account, and your drawdown decreased from maximum drawdown that was 87, now is maximum 53, and the average 28. This is the point, this is the reason why I said that this is not a good strategy, even though it's profitable. It's a profitable strategy, okay? You can see it's profitable, but it has too high drawdown, because this 40% win rate is too little, and this reward ratio is also too little. If you increase your reward ratio to 3, for example, it drops from 50 to 31, and the average 19, okay? And also, if you increase here, it will become another strategy. Let's go back to the 2%. I'm just showing you that this is not a good strategy. If your strategy looks like this, even though it's profitable, I don't know if I should say this, because it's a profitable strategy. But even though it's profitable, I wouldn't use it for myself to manage my capital, okay? Because I think the drawdown is very high, okay? I think the drawdown is very high. But it's profitable, and your risk of ruin is 0%. At this level, when you have $30,000, you can risk 1% per trade, okay? So you risk $300 and you make $600 when you win. I could even decrease more here the risk per trade, so that we could decrease the drawdown. Okay, it's not sure you have this drawdown. Okay, it's the probability. It can happen, it cannot happen, but this calculator is showing the probability of it happen. The average is 28. So the average, it's almost sure that you have at least 28% drawdown with your strategy. Okay. What I have to talk about now. Okay, so we were talking. I don't have a script. Okay, when I'm explaining these things here, I put some topics before, and I just remember. Maybe I should make a script, but I like this way. You know, I can explain better without a script. So here, even though you can decrease your drawdown, let's set here as, I don't know if I can, 0.5. Okay, 0.5. So it came from 50-something, 53, to 28%, and the average 15. But what is the problem here? The problem is that you still have 30,000, you still have just 50,000. This is too little money to risk 0.5%. Okay, this is too little money. Imagine you risk 0.5% and your account is $30,000. So your risk is $150 and your take profit is $300. It's too little money. I don't know if you agree with me, but from my point of view, it's too little money. It's not worth it to sit in front of the computer, have a lot of patience, pay attention, analyze, and wait more. And then when you trade to make $300 if you already have $30,000. So I do think it's too low risk per trade. Okay, so in this capital, when you are in this level, my recommendation is risk 1%. Don't risk more than 1%. I think more it can be too much. It can be too much for your amount of money. I still don't think you blow your account, but so that you can feel more safe, you can feel more calm trading, I recommend you 1%. Before I explain how I do my risk management, I have just a heads up. If you like this video, if you like this kind of content and think that somehow I can add some value to your life as a trader, please consider to subscribe. Every Sunday at 9 p.m. I do a live stream analyzing the past week and what you should expect for the next week. I do think this is a very valuable content and will be very helpful for you. Now, let's go. Okay guys, so now I'm gonna show you how I do my risk management, okay? How I manage the risk in my account. First of all, you have to know that I have 3 strategies to trade forex. These 3 strategies are based on volume flow analysis, but they have different metrics. Some are better, some are not. They are good, all of them are good, otherwise I wouldn't trade them, but some of them are just amazing. And in these strategies, I put a higher risk because it makes more sense. This is how professional traders manage the risks. You take a good strategy and you put a higher risk. You take not bad strategy, but a little bit worse, you have to decrease your risk. Okay, it doesn't make sense to take the same risk even though it's profitable. It doesn't make sense. Okay, so this is some concept you have to apply in your trading system, in your risk management. I'll talk about my first strategy, how I manage the risk in it. Okay, let me put this white background. I'll just write some numbers here so that you can understand. So I'm going to talk about my first strategy. It's movement absorption. I will not explain how it works here. If you're curious, you can click the link above here or go to my channel and check. This is until this date, this is the only strategy I published here on the channel. Okay, so let's go to the metrics. This strategy has about 70 to 80% win rate. Okay, yeah, it's pretty high. It's pretty high. Okay, but just win rate doesn't mean anything. Okay, what is the risk return? 1, 2, 3 risk return. Okay, now it got really interesting now, right? This is one of my best strategies. I still have another one that is quite good, but this is a very good strategy. I do really like to trade it. It's a lot. It's up to you if you believe or not. I have the tracking record, but you can just check the video and see and apply and check the charts. You can see that it's very, very, very accurate. Okay, that's the beauty of flow. That's the beauty of trading with the flow, with the volume, and not just looking external patterns. Okay, so this is one of my strategies: 70 to 80% win rate, 1 to 3 risk return, and a risk on it 1%. Okay, so every $1,000 a risk here, I make $3,000. This was the first strategy. Okay guys, so now I'll show you how I manage the risk of my second strategy. My second strategy is called squeeze. Oh, it's white. It's called squeeze. And squeeze is basically when the market makes some very, very fast price acceleration with a lot of volume and the delta being extremely aggressive. It means that some player, either the buy side or the sell side, was squeezed, okay? And they had to hit their stop loss. That is the squeeze. This strategy doesn't happen all the time. You cannot take this opportunity all the time, but it has a really good win rate and a really good risk return, okay? So usually I can take these opportunities once a month or once in 2 months, but this is a strategy I really, really love it. Risk return, win rate, okay? Win rate is 83% of this strategy, and for squeeze, 1.5, okay? Is 1.5 risk return. So every $1,000 I risk here, I make $5,000. I really love this strategy. It's a pity that doesn't happen all the time. Of course, banks don't hit their stop loss all the time, so it's not so common. But when it happens, I like to risk a little bit more. Okay, I risk on it 1.5% of my account balance. Okay, this is how I manage the risk of my second strategy. I don't have any video about this strategy in the channel. I don't think of recording. Maybe in the future I'll show you. To be true, I really don't want to show you all my strategy. I don't want to post all my strategies here. But let's see, in the future maybe I'll post more about it. But for now, I don't have a video about this specific strategy. Okay, now let's go to the third and last strategy. So this is how I manage the risk of my third strategy. I call it aggression, absorption. Okay. This strategy has a lower win rate. It has around 50%. Okay. 48 to 50% win rate. Again, risk return 1 to 3 risk return. I don't trade any strategy that the risk return is less than 1 to 3. For me, it's the minimum that I agree, like risking my money. I want to make more money. It doesn't make sense to risk $1,000 to make 1,000 or even 2,000. I still think it's little, okay? At least 3,000, okay? So this is my second strategy here because you can see the metrics are not that good as the previous strategies. I risk here 0.5%. What I like about this strategy, you can think, oh, but if the other strategies are better, why don't you just trade the other strategies? Because this is also profitable. I also make a good money with this strategy, but because I understand that it's not so accurate, I risk a little bit less, okay? And also I have more opportunities here. Different from the previous strategies, here I have opportunities every week, okay? Sometimes twice a week. Sometimes I have 2 opportunities in the week to apply this strategy and make some money, okay? So this is the difference. Okay, Paulo, but it didn't show if your strategy is according to the risk aversion calculator really good. Of course it is. It's better metrics. I'll just show my worst, okay, the worst of my strategies. 40% win rate, risk per trade. Here it takes 0.5. I could take more if I want. Reward 3%. I can set here 95 percentage of balance. Okay, let's just make the calculation here. And you can see that my average drawdown is 6.58 with this strategy and maximum 11%. Okay, I feel very comfortable with this since it's not really good metrics, this strategy, even though it's good. This is how I feel comfortable with this third strategy. I will not calculate the other strategies because if the worst is of course very safe, imagine the previous examples, okay? This is how I manage the risk in my account, and if you want to manage the risks as a professional, I recommend you to do the same. And until now, I just posted a video about my first strategy. But if you want to learn my other strategies, let me know. Write on the comments below that I might make some video about it. For your attention, my sincerest thanks.